Could XRP ETFs get fast-tracked by US regulators? According to FXStreet, the SEC is weighing an expedited pathway that could shorten the approval clock for spot crypto ETFs, and XRP may qualify if objective listing standards are adopted. So what is this fast-track idea? FXStreet reports that major exchanges have asked the SEC to adopt generic listing standards for commodity and crypto ETPs. Instead of handling each new crypto ETF through the full 19B gauntlet and months of back and forth, the SEC could approve funds that meet a defined checklist: surveillance sharing, custody, pricing, and disclosure, much like how traditional ETFs are handled. Galaxy Research argues a rules-based framework would clear the backlog and give issuers clarity, while expanding regulated access for investors. Why this matters for XRP? If the SEC adopts generic standards, issuers wouldn't need to reinvent the wheel for each coin. As long as an XRP ETF meets the same market integrity and investor protection criteria, it could move through a streamlined review. FXStreet frames this as a meaningful boost to XRP's odds because the conversation shifts from should XRP get an ETF at all to does a given filing meet the rulebook. Let's talk timelines and mechanics. Today, crypto ETFs often face up to 240 days of review. Under a generic standard, the exchange's rulebook would pre-authorize listings that meet the criteria, while issuers still file and update their prospectuses. Practically, that can compress timelines and reduce the number of discretionary delays we've seen with previous crypto products. It doesn't guarantee approval, it just swaps case-by-case uncertainty for a clear checklist. What would that checklist likely include? Based on how the SEC handled Bitcoin and Ethereum ETFs, expect robust market surveillance sharing, high-quality pricing sources, cold storage custody with qualified custodians, and detailed risk disclosures on volatility, concentration, and forks. If those pieces are in place, an XRP product can be judged on the same standards, not on bespoke, moving goalposts, price context, and key levels. FXStreet notes XRP has been holding a key moving average as ETF optimism builds, with traders eyeing a decisive move above the $3 psychological level. The next waypoint many are watching is the cycle high near the mid-3 South. A clean break and hold above that zone would support the bull case if ETF headlines turn positive. Big picture pros and cons. The upside scenario is straightforward. A rules-based path unlocks spot XRP ETFs from multiple issuers, broadens institutional access, and creates steady inflows that don't care about intraday volatility. That can deepen liquidity, tighten spreads, and reduce the tourist-only feel of rallies. The risks are equally clear. The SEC may narrow what qualifies, slow walk implementation, or keep a high bar on surveillance. Even with an ETF, flows can be choppy, and price can sell the news if positioning is crowded. What to watch next? First, the SEC's decision on adopting generic listing standards for crypto ETPs. This is the switch that enables any fast track. Second, new or amended XRP ETF filings from major issuers once the rules are clearer. Third, exchange messaging when Nasdaq, NYSE Arca, or CBO signaled their rulebooks are live for crypto ETPs. The clock effectively starts. Finally, watch the tape. Sustained spot demand, healthier order books, and elevated but orderly volume are the fingerprints of ETF-driven participation. Bottom line, according to FXStreet, the fastest route to an XRP ETF isn't a one-off exception, it's a standardized rulebook that treats crypto ETPs like other commodity funds. If that framework lands and issuers meet the checklist, XRP has a credible path to approval and a stronger case for institutional adoption. If the framework stalls or gets watered down, timelines extend and the market keeps trading headlines. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future.